The Fibonacci sequence is mostly used to identify support and resistance levels. It's thought by some that the natural Fibonacci ratios all around us influence the human behavior that we see in financial markets.
Wow, really?
I've got to be honest, I don't really think this is a phenomenon in trading. The reason that Fibonacci is useful, like most things with support and resistance, is because enough market participants are looking at it.
And so it becomes self-fulfilling?
Exactly. Spot on.
So you've mentioned the Fibonacci sequence, but what are Fibonacci retracements exactly?
Good question. Fibonacci retracements are often applied to charts after an extensive up or downtrend to indicate potential corrective pullback levels and therefore horizontal price support levels. Once a trend has finished, it's measured and horizontals are plotted at retracements of 23.6, 38.2, 50 and 61.8%.
Okay, and why these percentages?
Well, the 61.8% is the ratio each number increases by in the Fibonacci numbers. For example, 21 divided by 34. If you skip a number, the ratio is 38.2%. So 21 divided by 55.
And if you skip another one, is that 23.6%?
You've got it. 21 divided by 89. 13 by 55. The 50% is just the 1 divided by 2. There are other Fibonacci retracement levels, but these are the popular ones. Most charting packages and trading platforms have Fibonacci retracements as standard functionality. Let's have a look at them on a chart. Let's take a look at Fibonacci retracements in action. First, let's add them to a chart. Now, because they involve a degree of trader judgment to apply, they are located within the annotation or drawing section of a charts package. Let's find Fibonacci in this list. When applying them, the trader needs to specify the trend that they want to measure the retracement of. In an uptrend, like this one, we draw from the lowest opening or closing price to the highest opening or closing price. You can see this has added lines at the Fibonacci ratios we discussed earlier.
So where it says 23.6% on this horizontal, what is the 23.6% of?
It's the level the price would hit if the trend retraced 23.6% of the vertical move up of the total trend. Look, a 100% retracement would wipe out all the gains.
Yes, okay, I see.
We can actually see some support is forming at the 61.8% horizontal. Remember, these are zones and not precise prices. One more thing I would like to add is when referencing retracements, when price returns to 23.6% and 38.2%, these are considered to be moderate retracements. Full retracements are at 50 and 61.8%. While Fibonacci retracement levels after uptrends are normally used to identify potential support levels and potential position opening opportunities, in a clearly defined downtrend, they are used to identify corrective retracements and resistance levels before additional selling occurs. Typically, they are combined with other indicators and price patterns to identify high probability support and resistance levels, and therefore trend continuation.
So what other ways is Fibonacci used in trading?
Lots of applications have developed. The large majority are still aiming to identify support and resistance in some shape or form. Fibonacci extensions are similar to how retracement levels are set, but instead of being below the high in an uptrend, popular ones extend above it to levels of 161.8, 261.8 and 423.6%. The opposite is true if we are analyzing a downtrend.
What do traders use those for?
These are potential levels that traders might set to profit take at.
Any other uses?
A few. Let's go over them quickly. Fibonacci expansions are a twist on extensions. These take into account the retracement move before projecting extensions. Traders can use Fibonacci time zones instead of the vertical price distance. These measure the horizontal time distance of a trend and use the golden ratios to project time periods into the future. You also get Fibonacci arcs, which are a combination of time zones and retracements. This tool draws arcs out of a trend to accommodate both time and price. Finally, similar to how trend lines work, Fibonacci fans take the trend and project out lines from the start of the move that cross at retracement levels.
That sounds like a lot to take in.
You probably won't use these, but it's good to know what some traders might be looking at. If you want to see them in action, go to your broker's chart package and have a play.
I will, thanks.